So this guy has shown us he can be a bad guy, just as we thought. Well, as investors, only one thought is on our minds. What next? At this point, you already know Russia invaded Ukraine last week. With more Russian tanks headed for Ukraine, and the possibility of an extended escalation, it is very easy to listen to the many fearmongers' warning of an impending crash. Fear sells. Never forget that. Hence, understand why they are using it. Those titles get more clicks. However, in this market, it is imperative to keep a level head. History helps you do that. It is the best teacher. Hence, let's look back at America's most recent war and what impact it had on the market. Let's be clear, we do not support any form of violence. This is only done from the perspective of an investor. So please, though it is very sad and difficult to do, let's forget about the violence out there for a moment. Let's get into the history. We will not look at 9/11 because it was very different. In that incident, we were attacked at home. So let's go a bit back in time. If you're old enough, you would remember Desert Storm in 1991. Once the attack occurred in January of that year, it rattled the markets. In fact, in the 2 weeks leading up to Congress authorization of that war, the S&P 500 tumbled nearly 5% and the price of oil jumped by 12.5%. However, 24 hours after bullets started flying, oil crashed by 33% and the S&P 500 jumped by 3.7%. Any déjà vu feeling with last week? Recall the Dow had an almost 2,000-point bounce back between Thursday and Friday, right after the markets cratered all week. In fact, last Friday, February 25th, was the best day of the markets this year. The Dow closed over 800 points higher. Those who are suggesting you should short this market really don't know what they are saying. They have been getting it wrong ever since. This is the time to buy the deep. These opportunities won't present themselves forever. Let's add something right now. As at the time of making this video, stock futures are lower. Putin announced he is putting his nuclear defense system on high alert. And Western banks pledged to cut off some Russian banks from the SWIFT platform. The market doesn't like uncertainty. It is okay to see the market take the hit. However, please recall markets go up and down. Do not short this market. Go long. No one can accurately tell its bottom or top. But the fundamentals continue to show it is going higher. Much higher. At this point, we acknowledge your concerns. You may be thinking, this time is slightly different from the past. And in a way, you're correct. The inflation of today is competing with record numbers from 40 years ago. All official data confirms that. Hence, one may wonder, does that not mean the markets are heading down and not up? Well, to put it lightly, something significant has changed. There was a time when the stock market was a good predictor of the economic reality of the times. There was a time when the news of unemployment, disease, or even war would hit the markets hard. However, those times have gone. They are in the past. The markets of today are shaking off everything. And there is a reason for that. If you want to understand it in detail, you can check out some of our other videos where we go into detail on this. For now, all you need to really understand is that all the bad news would eventually prop this market even higher. Once again, this is not financial advice. And this also does not mean we should throw away caution. Little risk does not mean no risk, especially in investing. All we are saying is that the fundamentals point to a much higher market moving forward. In fact, historically, in the months following the beginning of Desert Storm, after the initial hit the markets took, the stock market was making record highs. In about 5 months of that operation in 1991, the S&P 500 gained 20% and the Dow gained just about that too. We have every reason to believe we are about to experience another couple of record highs this year too. Yes, record highs. Not a crash. Does that mean if you short this market, you may not be lucky every now and then? You could. Nevertheless, good luck with that. So for this week, we expect some volatility. It wouldn't be a proper market in these times without some volatility, right? However, we expect the Dow to crawl out of this initial 500-point loss. When? It's anyone's guess. It could be right as the bell goes off, or it could take a couple hours or perhaps even days. And a lot could happen in between that time. We are not clairvoyant as we would like to be, so we stay away from the business of picking tops or bottoms. All we know and do here is looking at the technicals and the fundamentals. And when you merge both, you only come to one conclusion. There's only one direction for this market. Up. That said, there are a few things to look out for. The market gets spooked once the word nuclear is mentioned. Hence, if Putin brings it up again or he gets a similar response from the United States, don't be surprised to see a fear trade. The Dixie would shoot up and the 10-year yield would suddenly crash and stocks would follow too. But as with every fear trade, that would be short-lived as well. How long would that last? No one can actually tell. But it would be short-lived when you look at the whole picture. All those disagreeing with this perspective just need to look back a few months. This market has literally taken all sorts of hits, even the shutdown of the global economy, and yet, it still found a way to make new record highs upon new record highs. When you look at it that way, you realize it's really going up. Nothing can stop it, except the Fed. And no, not by interest rates, but by something else. We will discuss this in our next video. Remember, no picking tops or bottoms. However, remaining fully expectant of a boom, not a bust. And this will be across the board, of course. Well, except for precious metals. And with that too, you know why. JP Morgan keeps getting caught spoofing the precious metals market over and over again. That's a story for another day. For today, we stick to the stock market. And despite the economic news, we expect to move into the green, except for any drastic news from the key players in the ongoing conflict. As we always say, it is best to keep it simple. And remember, stick to your risk management in this game. The old saying of the market continues to remain true: bulls make money, bears make money, pigs get slaughtered. Thank you so much for watching. Please, kindly consider subscribing. We release videos every US market day, so please be at liberty to check out our other videos. It really means a lot to us. Thank you.